What's up, everyone? It's Caddy with Money Investing. So inflation is upon us, and we are going to find out exactly what inflation numbers are looking like for the month of March next week on Wednesday, April 12th at 8:30 a.m. Eastern. That's when inflation numbers for the previous month of March, come out. It's going to be a pretty big day for the market because inflation has pretty much dictated how the markets have traded over the last year and a half, and there's still a lot of uncertainty with respect to where inflation is going in the US. Is it going to come down? Is it going to stay higher? Or is it going to accelerate back to the upside? So in this video, I'm going to break down all the expectations. I'm going to break down what you need to know before the inflation numbers come out. And I'll also break down my bear case, base case, bull case, and optimistic case for the market and what type of reaction we can get from the markets after inflation numbers come out. So I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. We talk a lot about fundamental analysis, technical analysis, stock options, and macroeconomics as well. And the link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, and all the other member benefits, including private videos as well. And the fundamental and technical analysis courses, the bundle, is currently 60% off, and that sale does expire tonight, so you can take advantage of it. And coupon code is going to be Easter, in celebration of Easter, of course, and that link is going to be down below as well. So first things first, let's just quickly go over what the market consensus really is at the moment. So this is going to be the economic calendar, and again, you can see CPI over here on Wednesday, April 12th, comes out at 8:30 a.m. Eastern. Don't worry, I will be live to cover this report. And of course, we've got jobless claims, we've got PPI numbers coming out on Thursday, April 13th. We've got retail sales, consumer sentiment. It's going to be a pretty packed week moving forward. This right here is going to be Bank of America. We're going to actually circle back to these expectations, but this is the consensus right now going into next week for inflation. And one really interesting and quite concerning pivot for the market is going to be this idea that core is actually going to be higher than headline. So CPI month over month consensus is 0.3%. So we're still expected to see a price increase by about 0.3%. Year over year, we're expected to come down to 5.2% from 6%. And that's, again, some of the year over year comparisons coming into play. And we're seeing, because of the higher comps, year over year headline number is coming down pretty dramatically from 6% to the expected 5.2%. Now, ex-food and energy month over month is expected to increase by 0.4%. That is going to be a little bit hotter than what the headline CPI is going to be. And year over year, excluding food and energy, so core CPI is expected to increase not only on a month over month basis, but increase to a level which is higher than headline CPI. So we're going to see a crossover potentially going into next week where core CPI is going to be potentially higher than headlines. So 5.6% is that number, which is going to be 0.1% higher on a year-over-year basis from the previous number of 5.5%. And it's obviously going to be much higher than the 5.2% of headline CPI. That is a little bit concerning because if we do actually end up seeing this print, well, that's core CPI for you stabilizing a little bit, and it's more than twice the Fed's target. Something to definitely watch. This right here is going to be Cleveland Fed's expectation nowcast, inflation nowcast. And what you'll notice is for March 2023, they're expecting CPI to increase 0.3% month over month and 0.45% for core, which is kind of in line with what we have over here, 0.3% and 0.4%. And on a year-over-year basis, they're expecting for CPI to be sitting at 5.2% and for core to be sitting at 5.66%, which is going to be a little bit higher if you're rounding up. It's going to be closer to 5.7%. If you're rounding down on this, 5.2% is going to be that number. So again, very much in line with what we have in terms of the consensus estimate. But that core number, if it ends up at 5.6 or higher, is not going to be good, in my opinion, for the market, considering that that is really what the Fed is paying attention to. Core is what the Fed preferred measure of inflation, of course, is PCE, but within PCE, they also pay attention to core, and their expectation for core is for us to see 4.6 and then increase to 4.67% in April of 2023. In other words, they are expecting prices to accelerate a little bit to the upside on a core basis when you exclude for food and energy in the upcoming months. So that is not going to be great news for the market because the market right now is pricing in close to 9 cuts over the next 12 to 14 months, right? We're expecting cuts all the way down to as low as 2.5 to 2.75%. After seeing a very modest 25 basis point hike in the upcoming May meeting and staying there for a couple more meetings, so pausing and then rate cuts beginning towards the end of this year for consistent cuts all the way through September or October of next year. Now, this right here is going to be rents. Now, rents have obviously been a big driver of inflation. They have consistently pushed up, and we've talked about how rents, pretty much make up over a third of inflation. And I think the reason for this expectation where CPI is going to come down year over year and core is going to start to push higher is because that rents are not slowing down. Even though we did see a little bit of a blip over here where rents were lower between the months of like September, October, all the way through February, we haven't really seen that being reflected in the actual inflation report. Inflation report still suggests that we are going to see, still suggests that rents are going higher, and they're going to continue. Even in Bank of America's expectation for the March forecast, you'll notice that rents over here, which is going to be core services, under core services, rent or shelter pretty much, they're expecting 0.7% increase, and specifically rent, an increase of 0.8%. So even though the rents, apartment listings, national index has suggested that we have seen a pretty significant decline here, that has not yet been reflected in the actual inflation report. Now, one thing to consider is that that report obviously comes with a bit of a lag. So these are, actual real-time rentals month over month. So it's possible that we see that with a bit of a lag. So it's possible that, in the upcoming reports, rents and shelter prices do actually start to pull back. But in this one, you'll notice that rents nationally increased 0.5% month over month, and that's how much they were up in the month of March. And not to mention that we want to go over some of the inflation trackers, right? So we look at grains, metals, materials, energies, things that I have broken down in my previous videos. And you'll notice that energy was for the most part down. Gasoline was the only up that was up like 6.5%. I think prices at the pump have increased a little bit, and they did back in March as well because of the supply cuts, because of what OPEC and OPEC Plus members are doing with the supply cuts, and that resulted in oil prices to rally back up. And we are seeing some momentum come back in for crude to be trading back above $80 per barrel. But for the most part, crude oil, natural gas, and retail gasoline, they were all down, so that should be reflected in the inflation report. In terms of metals and materials, some of the big movers were really lumber prices dropping over 14%, so that can be disinflationary, but steel did go up a little bit over 10% in the month, and silver and gold have obviously been rallying at the moment. They are one of the outperformers relative to the S&P 500, so gold is up over 7% and silver up over 15%. Just in the month of March alone. And of course, they are up, I think, double digits on a year-to-date basis. Now, when it comes to food, some of the most traded commodities in the world are going to be corn and soybean, and they were unfortunately both higher, 1.4% and 4.3% respectively, with cane, sugar prices up over 10%, and agriculture fund was up over 2.5%. Wheat prices were slightly lower, and coffee prices did decline quite a bit at over 8.48%. So it's possible that we do see a report that does show food prices once again increasing, shelter prices. It's going to be a little bit of a question mark, but gasoline prices once again helping inflation coming down. And as a result, you've got your headline CPI, which is rolling over, right? Core CPI does not include for food or energy, and that's one of the reasons why it's still pushing up on the back of shelter. At least that's what the expectation is. And metals and materials, they are expected to kind of be a little bit more sideways. Some have come down, but gold and silver have definitely gone up, which could push up prices of some of the other commodities and some of the other categories as well. Now, going over to my expectations in terms of bull case, bear case, base optimistic case, all that stuff. The consensus, as I pointed out, is 0.3% for month-over-month CPI. Year-over-year, it's sitting at 5.2%, and core month-over-month 0.4%, and year-over-year 5.6%. This right here is going to be the most interesting piece within that inflation report, because that year-over-year increase is really signaling that we are stabilizing on a more core basis, and prices could start to accelerate back up if shelter doesn't come down fast enough. Now, the base case is going to be pretty much in line with the consensus. There's no changes there. So if it kind of hits on target, that's going to be a base case, non-reactive from the markets, in my opinion. But if for any reason we see core above 5.6% and core month over month to increase by 0.5% or higher, and year over year, we see, headline CPI increasing over 5.2% and month over month at over 0.4% or higher, So this should really be 0.4 right here. I'm just going to put an equal to sign. So anything 0.4% or higher is certainly going to be a bear case for the market. The market's not going to like that very much because that is going to be a very hot read on inflation. Now, on the other side, optimistic's going to be a little bit less than 0.3% month over month, 5.2% or lower on the year over year. And core coming in less than 0.4% month over month, and year over year coming below 5.5%, because that is going to be lower than the prior number, and it's going to be much better. It's going to be beating expectations, and it's going to continue on that downward trajectory. It's not going to stabilize, it's not going to tick up. Instead, it's going to continue on its downward path if core headline and both core continue to move downwards, right? If core ends up below 5.2%, that's going to continue that trend lower. Now, the bull case is going to be super, super optimistic. And this is an example, or this is a case where the markets end up rallying like 5%. NASDAQ could be up like a lot if this ends up happening. And that is if we see deflation on a month-over-month basis for headline. We see headline CPI come in below 5% on a year-over-year basis. Core increasing, but less than 0.2%. And year-over-year coming down to below 5.3%. In my opinion, this could be a very much of a bull case scenario for the market, where we end up rallying for the NASDAQ past 4,200. For the S&P past 4,200, the NASDAQ past 13,000 points as well. So if you go over to the markets right now, S&P 500 does have a pretty strong resistance to break out of. And this is a level that we have been talking about for quite some time, sitting somewhere between 41 and 4,200 right now, and the next target is going to be 4,300. This is going to be that next level if you're able to break past this level of resistance. And of course, we got a NASDAQ sitting right here at 12,280. Next resistance sitting roughly at 13,200 if and when we get that breakout to the upside. And of course, a lot of it will depend on where inflation numbers are going to go. So hope you guys enjoyed this video and a complete update on what to expect. Already gone over my base case, bull case, optimistic, and bear case here. So in my opinion, I think there is a probability that we do see a little bit of a base slash bear case from the market. I mean, core, it really depends on shelter. That's a big of a question mark. There's a lot of uncertainty around shelter prices and rents. If they continue to accelerate to the upside, it's possible that core CPI accelerates to the upside as well, because again, a lot of it is dependent on shelter, but headline is still going to come down because of those year-over-year comps. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. As always, happy investing, and I'll see you all in the next video.